David, Happy New Year to you, and thanks for taking the time to join us today. What should we be looking at in terms of this week and in terms of the movement that we're seeing in the gold?
Well, obviously, we started the first year of the trading day off with a bang in gold, and it moved up 12.6% last year. You know, gold is an excellent tool to be used in a long-term portfolio for diversification and uncertainty. Considering it went up 400% since year 2000, I think we're going to have some major movements in gold. According to the ETF securities, they're saying that we're going to test the 1363 level this year in 2018 and surpass it to 1445. That's a little bit rich for my blood. I think we're going to, move up above 1400 this year, but I think it's going to have a lot of volatility along the way.
So, David, it's JB here. We know that the metals closed out really strong in 2017. Do you expect this trend to continue in 18? I know you highlighted gold right there, but do you see that trend also coming with silver?
Well, I think all four metals, we're going to see upticks in the market. They did great last year. Silver is the least performing of it, only moved up 6.6%. I think, though, higher interest rates, as the Fed does do what they're going to do, raise rates 3 times in 2018, I think that's going to be an added benefit towards the silver market. I like it seeing it broke $17 or $17 here recently.
Yeah, we've been watching silver, which has been lagging a bit, it seems like, here, but also keeping a close eye on the dollar there, and the gold is mentioned now. I'm kind of curious because the gold trade in 2017 was somewhat limited. We saw it somewhat range-bound, 1,200 to 1,300, and that's odd considering the directional conviction that we saw on the dollar, which was primarily lower throughout 2017. I'm curious, why do you think the gold was able to find value around 1,300, but considering the dollar was so weak and trending lower throughout 2017?
Well, obviously, the dollar and gold to trade is back in place. The dollar moved down about the same amount as gold went up, gold slightly higher. I think there's a lot of volatility in 2017 because we're moving into times of uncertainty with a new president, moving into a possible war and even escalating now most recently. But when you look at the Fed raising rates prior to rate increases, gold had pulled back slightly historically, and then after the rate was raised by the Fed, then gold made its move. I think we're going to see more of that. And so if you're a short-term trader in gold, there's going to be some volatility that you can take advantage of and make profits in the gold market. We're long-term holders of gold, and I think we're going to see much higher prices in gold. I look for 2019 to be an incredible year for the gold market and not be so incredible for stocks.
So if we're looking here at the 3 potential rate hikes coming in 2018, it sounds like you expect some pops in price for both gold and silver along the same lines where those interest rates occurred. Do you see the same thing happen with palladium and platinum as well?
Well, palladium platinum has made huge moves. When you look at the palladium market, it's moved, or the copper market, excuse me, has moved up 28%, but palladium moved up 55% in 2017. Most of that is 67% of palladium production goes to catalytic converters, and 12% of palladium goes to semiconductors, and the rest, 21%, goes towards dentistry and jewelry. But when you look at the production for palladium, last year, 78% of the production went into catalytic converters. This is mostly due to what happened in the automobile industry, where we had a rebuying of cars due to the hurricanes in Texas, Florida, and the Caribbean. So I don't see the huge increase in palladium that we see in 2008 as a result of a lack of spurring of growth in the U.S. automobile industry. We had phenomenal sales in the U.S. automobile industry. China's, though, stepping up to the pump. They're actually suggesting that their auto sales are going to double in 2018 compared to 2017, according to the Passenger Car Association of China.
Hey, Dave, I'm curious, we're well aware of the fact that we're in a higher interest rate environment than we have been. Fed has got the dot plot right around 3 rate hikes in 2018. How does increased inflation actually play on the price of gold? You would think with higher inflation that, again, you would have higher rates and in theory a higher dollar. But talk to us a little bit about the gold inflation correlation.
Well, we've been in an artificially low environment of interest rates, and now we're trying to move towards normalization. And the Fed wants to, at the same time, unwind their balance sheet. So we have a wild card happening here where around $2.4 trillion of U.S. treasuries are going to be sold by the largest holder being the Fed. This is creating some uncertainties. plus with the fact of war possibly coming, and maybe a stock market correction. I don't think we will have it in 2018, but it is coming at some point, and when the longer it waits, the more severe it will be. That creates uncertainty, so there's more buying opportunities in the gold market. On a side note, I think why we're seeing gold move up too is China's been massively buying huge quantities of gold, and Russia joined in the last 4 years buying over 500 tons of gold. So the demand is incredible for gold, and China wants to launch their currency, tying it into the oil called the Petroyuan. That's something we've been watching and studying, and I've been writing a white paper on it. And if that actually does happen, where the yuan could be fully convertible to gold, we will see a huge demand for gold. I think that's a big wild card. That's something we're watching.
Yeah, we've been dialed on to that into that as well. A major wild card in terms of not only as metals, as you pointed out, but the dollar and across the board here. That would stir things up quite a bit, to say the least. Hey, David, I want to thank you for joining us here today. Welcome, thank you for joining us and for your first visit on Futures with Litchtenstein and Hinks. We look forward to having you back in the future.